everybody. Welcome to the TraderMerlin show for your, I don't even know what day it is. I'm going to call it Tuesday. I think we got more time out there than that. Yes, Tuesday it is. Good to see Les. You're back on top. It's been a while since you joined the top fold there. So Les, good to see you. John and Shadow, as well as Eric, Johan Vervoort. I love the. I always forget. I forgot if you were Dutch or not. I think that's a Norwegian last name, but we'll see. Big Eb, good to see you. David as well. We'll see you this evening also in our Crypto Investor Live sessions. Chris, good to have you, my friend. I saw you said the crypto bargains out there. There's definitely some good deals. I bought a little bit more today. I have 2 more orders, but you know, the truth be told, there could definitely be some more downside movement in here. But I do think at some point you'll get a nice big leg up and a run into the end of the year. But question is, how far is it going to sell off? We'll look at some of that today, too. Drew, Kojit, we got Zach as well. Catherine, I got your questions, which hopefully we'll get to today. Katut, good to see you guys as well. Margaret, Terry, and Herbert down in Zimbabwe. Oh, what was the trivia question? What is the state? What was the... already did this one, I think. What's the only dog that's from Zimbabwe? There you go. All right, let me dive into today's topic today, which is be a little bit similar to what we had yesterday. Where are these markets headed next, or where to next for these markets? And the reason I brought that one up is we had a question from a viewer that, let me see if I can get to Lee's question here, which was this one here. Lee said, these markets are crazy. Where do you think they're going to go? Hell if I know. I can't claim to be some soothsayer out there. I can look at the markets objectively and think, all right, well, this is where I think they're going to go based off of just the data that's present to me. So let's start off by going through the kind of the top 7. I think that there was some very interesting patterns that formed on our equity indexes today. Then I've got a slew of listener questions, and then I got to wrap up definitely earlier than normal because I got to take my little pup to the vet. So I'm sure he's really excited about that one. All right, so we'll go and start off with our charts here, and I'll work our way up from the bottom. You know, there was, I would say, a buying opportunity, but it's still just sliding here in the crypto space. Bitcoin down around 6.57% right now, and as you can see by some of these other ones, lots of double-digit losses for the crypto space. There are very few that are positive, if any, that are positive today, but just continuing selling pressure across the board. And, you know, maybe it's a knee-jerk reaction to the Evergrande thing. I think that's part of it. There's also a talk track that maybe it's people pulling money out of crypto because they have so much gains to go cash, so when the markets do crash, they can buy back into the equity market. So either way, we have difference of viewpoints on where these markets might be headed. Right now, just overall, crypto looking pretty ugly. Weakest performer, down almost 7% for Bitcoin. Now, we start to climb here, and this is where it got interesting. If you look at the S&P futures, you're going to get a different picture than you do by looking at the indexes, or at the ETFs, right? So I sometimes prefer to look at the ETFs. We'll look at 2 here just so you can kind of see a compare and contrast. Here's your S&P 500, and obviously we had that monster down day yesterday with the big bottoming tail, meaning momentum was ripping back to the upside. Well, we did get some follow-through momentum and then just gave it all back. That's really not a good thing. After a huge sell-off like yesterday, if it was in fact a buying frenzy and people jumping in to load the boat on an upswing, you would have gotten a much stronger follow-through and it would have stuck. So this clearly tells me there's people selling out there. There were some that were found a buying opportunity, but the sellers came back in. And even though it wasn't a big down day, only down 0.28% right now on the futures, it's that long topping tail and momentum again that makes me skittish on going long and kind of buying anything S&P related. So let's look at SPY. Here you can see a different picture, right? We show that big gap up because obviously when the equity markets closed, we were right here, and the futures market dragged it up a little bit. But it was just a big red candle. Not quite an engulfing candle. I know some people would look at that as an engulfing pattern, but it's not. It's just an overwhelmingly negative candle out there for today's session. So my gut feeling on the S&P is you'll see some more transition towards these lows. Of course, we'll talk about some major economic announcements happening tomorrow at the end of the show today. Moving on up, you got the Dow Jones Industrial Average, which has a very similar picture. Here's your YM, real ugly. It really kind of breached that demand zone that goes all the way back to July 19th. We talked about that yesterday. Today bounced back up a little bit, but still you've got this really weak candle today, closing right near the lows, and to me that is, again, a sign of pessimism. And you see the same thing out here with the NASDAQ. If that was the top of an uptrend, if today's candle was the top of an uptrend, I would love it and be embracing this as a great selling opportunity potential, but its location makes me a little apprehensive about building anything, but I do think the momentum will carry through to tomorrow. Now, of course, things will probably be light because of the Fed meeting tomorrow as well. Here you have the Russell 2000, which comes in third place. Similar picture, although it shows a slightly green candle, but I'll call it down on the day, right? It's just a kind of a real negative overall. Eric says, is that a hammer pattern? No, that would actually be a shooting star. So I think you're referencing this one here. The candle that formed today would be what some people call a gravestone doji or a shooting star. Now, it really depends on where it's at. The candle that formed right there. Let me see if I can do some artwork for you guys. I like to go over to the platforms occasionally and do a little bit of artwork. So I've got my slides off to the side here. So let me pop in before I go into kind of overall markets, because there was some interesting things happen today. I'll create a new slide for you. All right, so bear with me as I bring this one up. So here is the big difference between these. Okay, and I'll go there we go. All right, now I got to go share that screen. Too many things doing live. So here, I'll just do a little sketchbook for you so you can kind of see what they look like. If you have price in an uptrend and it's moving up like this, right? If you have a pattern that looks like this, that's considered a gravestone doji, or some will call it a shooting star, because in theory you had this big up move, it formed a long topping tail, and then kind of shot it back down and closed near those lows. Now, really the easy way to trade that is just put a line across the bottom. When it breaks down below it, when it starts up above it and breaks below it, there's a shorting opportunity. If you have a shooting star and hammer, yeah, pretty much the same thing. If you have it down here as it's trending down, you know, this is actually my personal favorite, would be this pattern right here, which is considered a dragonfly doji or a hammer formation, right? That's pretty much it. Okay, shooting star, what is the best location? So shooting star would be if it's on an uptrend. So as you guys can see on today's price action, not really great. It's not that important. Really, all this is showing me is just negativity, but it doesn't scream weakness, right? If this was up at the top here, right? If this is up at the very top, oh, you guys would hear me just loving it. I would be really excited about it, thinking that this could be a huge down day the next day, but not today, just because of location, right? Location, location, location. Remember, so location is number one, but you also have, what is this candle telling us? And this candle is telling us that while we did have strength at some point, the overwhelming weakness came in and just pushed it down and closed it near the lows for the day. So if you have that proverbial battle between buyers and sellers, you know, who won? Well, at one point, the buyers were winning, right? They pushed that thing up, and all of a sudden, sellers came in, slammed it back down, you closed near the lows. If you're in a basketball game, does it matter who's winning the first half? No, it doesn't matter. It matters who wins when the buzzer rings and the game's over. That's what really matters. And who won that battle? The sellers won that here. Cool. All right, so let's keep going on to our indexes. I want to get to the Russell 2000 since there's a couple of questions about Russell. Nothing noteworthy here, just in the middle of the trend. Gold, we had a little bit of an update today. Pretty happy about that. My silver did well as well. So you had gold was up 0.63%. I'll show you SLV. So here's your silver, which is up 1.21%. I'm expecting some of these gaps to fill. There's some pretty big gaps that happened in the past week on silver. You get 1.2% to the upside. Now, the big star today, crude oil. Let's not forget you got crude oil inventories coming out tomorrow, but you had a 1.0% gain on crude oil today. It came right back down to that little 69.61 mark, which you've just left that line on the chart here, and then just bounced up off it. So that's your best performer. You had commodities doing well today. You can see the crude oil and gold doing well, and then here is your dollar index, which had a shooting star. So there was a question about shooting star. Well, there you had yesterday was a shooting star on the dollar index, but it just didn't really get the full follow through. Okay. What do you think of VectorVest? Okay, this is just a total personal thing. I've never actually used VectorVest, but the salespeople that I see at these trade shows using VectorVest were like the slimy of slime, in my opinion. So I just got a real bad feeling about them. Personally, what you're getting with something like VectorVest or dozens of other software out there is something that helps make decisions for you by analyzing market data. I mean, what do you think we're doing here? We make decisions by analyzing market data. So I really don't think you need to spend the money for VectorVest. They make all kinds of great claims of how amazing and accurate their software is. But again, it's one of those companies that I feel has shills in the crowd asking to look at a specific stock saying, oh, see, our software is amazing. Not a big fan of those types of things. Plus, you're paying monthly fees, subscription fees. Forget it. You don't need to pay for that stuff. Just, you got it all in here in your head. Yeah, I guess. I didn't know VectorVest was still around, to be honest. Okay, so let me go to some interesting pieces for today. And the reason I'm bringing this up is you had earnings yesterday. You had Lennar Brothers report earning, or yes, Lennar reported yesterday, and they had pretty decent earnings. So it made me wonder, because we have more housing data coming out this week. We also have more housing stocks. So I think we have Toll Brothers coming out. I'll tell you about that one here in just a little second. I think they're reporting earnings tomorrow, which I can verify here. No, KB Home comes out tomorrow. And then on today's earnings call, or Monday's earnings call, you had Lennar reporting, and they just slightly beat their earnings expectation, and they were down slightly on the day. Now, I can show you Lennar's chart if you want, and the reason I'm setting this stage here is because we have on Friday, I believe, is new home sales, which has been looking really good. We have existing home sales coming out tomorrow, which will also be important. But here is your Lennar, sold off yesterday on their earnings, and then had a nice little bounce off a pretty big gap down today. We will have KBH reporting tomorrow. I believe that's going to be before market open. I can verify that one for you in a second. But it's the data today that I think is come out interesting with regards to housing. You see housing starts way better than expected. That's this number right here. Way better than expected. They expected 1.55 million. It came out at 1.62. You also had building permits, which is great for existing home sales. That jumped much more than expected, from 1.63 to 1.73 million. So those are both very good numbers on the day with regards to housing. And I mentioned the current earnings. So here's what you have for earnings for today. You can check these ones out if you want. I can bring up some charts. You had Adobe beat earnings. They were down almost 4%. FedEx missed earnings, down 4%. The real one here, which is, I guess, the one that most people always want to know about, is ACB. I didn't see their number come out just yet. Let me verify that, just so we can make sure we get that number if it does come out. Yeah, they say they haven't reported yet, but if we put it to 5 minute, you'll probably see the after hours trading here on it. Yeah, it's still bouncing around. So they haven't reported quite yet. But Autozone is one that was a listener question from earlier, which I will get to here in just a minute. So that's kind of your major markets, top 7 high-level pieces of info. I will jump to listener questions here, which we already talked about that first one from Lee, which is, these markets are crazy. Where do you think they're going to go? My gut, in just looking at the way that price is acting, is I think we'll head lower. The challenge for me really is, tomorrow we have an FOMC meeting. So the question becomes, what does the FOMC say about several different things? Number one, what do they say about the markets overall? So what is the health of the economy? What's their stance there? For the most part, a lot of the economic data that they've been referencing has been getting better and better and better. Certainly initial claims is looking better, unemployment's looking better. So those factors look good. So the Fed will address those two. They'll also talk about inflation. We had mixed signals the last time. We had PPI numbers were much higher than expected, and then CPI numbers came in much lower. Well, if you guys know the dynamics of supply and demand in markets, if you have a producer making something and their cost goes up to the tune of 8% and the consumer's cost doesn't rise, at some point the cost will rise, right? They're going to pass it on through to the customer at some point. So there's that weird little transient inflation piece that's going on with PPI and CPI. We'll see how they address that. And then really I think the talk track will be the impacts from Evergrande and see how that might impact them. Granted, a large part of their debt is not in the US, so it shouldn't impact us too much, but it does reflect a systemic failure in somebody like China, which could be dramatic for our global financial system, where it'll be kind of this knee-jerk reaction, and the ripple effects from all that could be huge. Now, again, everybody that I've talked to pretty much says China's going to step in and intervene. Now, what do? Well, if they're intervening, that basically means China's just going to print a whole bunch more money to bail this company out. And that's going to be billions and billions of dollars. And if you think that they shouldn't be doing that, then just look at what our government does, to the tune of $120 billion per month we're buying of treasuries and mortgage-backed securities. So, we're the pot calling the kettle black, probably going, well, you guys shouldn't bail out Evergrande. And here we are, just spend. Bottom line is that should devalue that yuan a bit more if they produce a bunch more. So I think we're headed lower. I don't think it's going to be an aggressive one. I think we've got too many challenges on the horizon. Number one is we have FOMC meeting tomorrow, which will be talking about where they think markets are headed, and that obviously creates ripples. Number two, we have until September 27th to make this vote on the infrastructure bill. Who knows how that's going to go? Right now, the markets are just salivating over the prospect of having trillions of dollars pour into the equity markets, into material stocks, and all sorts of other businesses. Who knows if it actually gets to the bottom line? But bottom line, if there's money pouring in, that would be great. And it's just been delayed. So I think that there's a little bit of maybe skepticism on the infrastructure bill. Then you look at the debt ceiling, which we have until October 1st before we go into government shutdown, and then we start to run out of money. So you have Evergrande, debt ceiling, you have rate hike potential or tapering coming up tomorrow, and all these different events lead me to think that the amount of uncertainty out there is leaning more towards the sell side. That's why I'm thinking about reporting, thinking more downsidely, although I don't know. At this point, who knows which way it's going to go, but if I had to bet on it, I'd say we're probably going to be going southbound. All right, let's see. NJ, thanks, man. Appreciate that. And you always love to contribute. I do appreciate that very much. I have one of these t-shirts, Thrive. That's right. Is this the Thrive one? Yeah. Thrive. Well, yes, Koja. Wouldn't you? I would love to have that Thrive back. I'm hoping we get back OTA to those days where we can actually do those Thrive events. That was really a lot of fun. Okay, so real quick, this is one I just thought I would address quickly just because I feel like it's, I actually know Ken Kingsley. He used to be a regular on Power Trading Radio listener, and he says, OTA grad a while back, dropped out of trading and want to return. Where would be a good place to start? Look, for anybody who's an Online Trading Academy graduate, you have access to education, whether that's physical in location, on demand, or live online stuff. There's always going to be opportunities for you to learn. So I would say, if it's been so long you can't remember core strategy, go back through and take core strategy on demand. Todd and Kayla did a fantastic job of delivering the core strategy course on demand, so you can take it at your own pace. Kingsley, if there's something you didn't like or something you want to refresh specifically, just go straight to that. I would try to do the on-demand stuff first. At this point, Online Trading Academy has done options on demand, strategic investor on demand, futures on demand, and core strategy on demand. So those are the four we have right now. Forex will probably be the next one coming down the pipeline, and probably even crypto on demand. Well, we already have a lot of crypto on demand. So to me, that will be probably the best place to get started. And then, find out which asset class intrigues you the most and just go take those classes. They're starting to do physical classes again. I saw Larry teaching a trade plan class in Irvine, California today. So get in there and take some classes. You've got those retake abilities. Debt ceiling infrastructure now tied together in Congress. Personally, I think it is. I would argue that they are. One side's saying, hey, we want this. And they're going to go back and forth until they get what they want. And both sides are going to hopefully come out saying that they got, at least to some extent, what they wanted. Usually that's not the case, right? It always seems like one side complains they got railroaded all the way. So, yes, I do think that those two are tied together. Was Lehman as big as Evergrande? I don't know. I think actually Evergrande is bigger. If I remember correctly, they had a market cap. They got like a $1.8 trillion worth of assets. So I think Evergrande is bigger, but I'm not sure on that one. I'm not really sure. And here's the thing, Evergrande is not just real estate, right? They're tied into a lot of other things, commodities and mining and things like that, but real estate is their big one. They're this big conglomerate that's in kind of everything. And they were really doing I was kind of reading a little bit up on them last night. They were doing some shady stuff to get businesses and get people to buy their loans. Like they'd give you coffee makers and high-end bicycles if you were to buy their corporate debt. To me, that seems like bribery, but all right. Okay, so speaking of AutoZone, we had that chart up here earlier. There's a question that came in from Stanton. It says, I was looking at puts on AutoZone today. Is there anything to do about the wide spread? So first off, let's take a peek at the AutoZone chart. So here you have the S&P. We'll go AZO. Now, AutoZone reported earnings. Here's your AutoZone chart. It is only, here's a trick question for you guys. All right, everybody get your keyboards ready. I'm going to type in two questions. Number one, out of the S&P 500, which right now is 506 securities. I know, it's weird. You call it the S&P 500 and there's 506 in there. How many of those securities are above their upper Bollinger Band? Well, that's a trivia question. That's going to be a tricky one for you. I know some of you running to your platform right now trying to run a filter or a scan. But remember, if it's up above its upper Bollinger Band, that means that it's a technically overbought situation, right? So right now you've got a situation where there are some in the S&P 500, 506, that are above that 20-period upper Bollinger Band, which means technically overbought. I'll give you a hint. AutoZone is one of them. So we were looking at that earlier. And you can see right now coming into this overhead supply level, right around $16.43. Hard to believe that AutoZone is trading at $1,600 per share, but that's because it has limited amount of shares available. Oh, Jerry, you're getting a little ambitious there, saying that half of them, huh? No, not even close. Remember, that's going to be above its upper Bollinger Band. Remember, we had a huge knee-jerk reaction, so there really shouldn't be anything right now that's above that upper Bollinger, right? If you had a market correction as significant as we did over the past couple of days, you would expect there to be very few above that. There was actually 2 companies right now that are overbought, meaning up above its upper Bollinger Band. Now, here's another one. How many are below its 20-period moving average? Or sorry, I keep saying 20-period moving average. How many are below its lower Bollinger Band? So just to paint that picture, I'll throw Bollinger Bands on here, and you can see Autozone is in fact up above its upper Bollinger Band, and there are many, many, many others that are down below. Cool. So I see a few. So here I'll go and show my handy dandy filter that I use in TradeStation because I just love this one. You can see right now, if we go to the top of this list, and again, there's 506 securities, you have Autozone and Thermo Fisher, the only 2 out of 506 stocks that are up above its upper Bollinger Band, meaning that that's technically an overbought situation. Now, if you look at the other side of this, you can see right here it says negative. Anything negative means it's below its lower Bollinger Band. So we can scroll down here, and you can see going all the way to 135 companies. So what, roughly, call it 25%, somewhere in there? About a quarter of the entire S&P 500 is below the lower Bollinger Band. And for the visual, you would click on one of these, and this is pretty much the picture you're going to see for all of them, which has been selling off recently. I can go in here and enable my Bollinger Bands, which hopefully I have, and there you can see just slightly below the lower Bollinger Bands, right? I thought so too, Simon. It's kind of that weird little stat stuff that you don't normally see, but right now you have a lot of people are thinking, hey, I'm going bargain hunting, maybe I'll go look for some some oversold stuff. Hasbro, man, games apparently are not where it's at. Look at that. And not only is it below its lower Bollinger Band, it's screaming southbound. That's the worst one, is 37% outside this lower Bollinger Band. Unfortunately, I don't see any real strong demand zones here on Hasbro. I was thinking maybe this might be a nice one to try to maybe make a trade or line up something. How about Woo? Right? Oh, this should be called Boohoo. Remember Western Union, and for those of you who were following some of my shows last year, I made a big stink about this one. Is if you have cryptocurrency gaining acceptance as a medium to transfer money around the world. So for example, right now, if you go back a year and you were trying to send money to El Salvador, you had to use something like Western Union, which would take 25% fees and all sorts of delays, etc. Well, now I have a choice as a citizen of El Salvador, do I not? I can use Western Union, which is going to cost me a ton of money, or I can use Bitcoin, which is going to charge me very little. I mean, the incentive here for all those people to use to send money back and forth is huge to use something like Bitcoin, and Western Union is paying for it. I honestly would not be buying Western Union here, even though it's way below its lower Bollinger Band. I think you're going to see this one continue to fall and fall and fall. It's to me, I think the days of Western Union are done. I mean, anybody who's using digital assets and cryptocurrencies know there's no point, right? Why would you bother with Western Union? So that one's way below. Let it go. Akamai, that's about Zebra. All right, so here's one that might actually be a decent buying opportunity, right? Here's Zebra Technologies. Don't know what they do, never traded it. Well outside its lower Bollinger Band. So now you're eyeballing and say, well, where's some good demand zones? Well, the only one I really like is going to be down around this 507 mark. There is a small little spot right in here, maybe around 534, but not great. Anyway, I was just decided to show you that one. I completely overstepped the AutoZone question. So here's AutoZone. And I'll turn off our Bollinger Bands here to make it easy. And Stanton says, I was looking at AutoZone today. Is there anything to do about the wide spread with options? So if you're buying puts on it, I think you're probably in a good place, right? You've got this huge rally up in overhead supply. They just had earnings, so they had an earnings call. They beat it. They rally right up into supply. Great spot to be going short, right? Right in a supply zone and just nail it. Now, the problem that you're going to have here, Stanton, and this is one of the main reasons I run a scan or filter on my markets, is look at the volume for AutoZone. I mean, it had a huge day today. 311,000 shares. Now, granted, it's a $1,600 security, but its average is only 152,000 shares traded per day. So I can tell you right now, just by looking at that low volume number, that the spreads on the option market are going to be huge if it even has options. And it does. I did look at the option chain. But what can you do about it? You can't do anything about it technically. You could I think when I looked at today, the options chain was like, I mean, I guess I have to pick which strike price, but I did the 1400s. I think I wrote it down. Did I write them down? No, I didn't write it down. I looked at the 1400s, and at that you would be paying $11 for one put contract, and that's a December. Now the 11 was the bid price. The ask price was like 23, so you have a $22 spread on the options for AutoZone. Now, granted, I look at that after hours. I'm sure regular market hours would be tighter, but still, it's going to have a very wide spread because of liquidity. The only thing I would suggest is don't ever do a market order for your options, right? If you're going to be looking to buying some puts on this one, then maybe you cut the spread, split the difference, or negotiate with the marketplace. But I certainly would not be doing market orders on anything that has this low liquidity like you see here on AutoZone, and certainly the really wide spread. So sorry, Stanton, there's no real solution there other than making sure you limit the risk by using limit orders. If you shop at AutoZone, you probably Hey now, Margaret. I go to AutoZone. They're good. Better than Pep Boys. Manny, Mo, and Jack. They just shut down right down the street from me. But AutoZone, you got to go there in a pinch, right? I got to get my supplies. Let's see. There were a couple things about indexes today. What time we got? Oh boy, I'm gonna have to hurry this one up. A couple things about indexes. Skilled Stockman says, what will the Fed do tomorrow? That could really get this ES to come down hard or go up or down, right? Right now, here's what I believe was going to happen. I believe that Powell was going to signal tapering and say, we're looking at scaling back purchases. We'll start doing that in October or November. I think that he was going to telegraph that punch at this meeting and say, we'll start very slightly, right? Like, right now they're buying $80 billion worth of treasuries and $40 billion worth of mortgage-backed securities. Okay, great. My assumption would be that they're going to we're going to cut to 75 billion of treasuries and 45 billion of mortgage-backed securities. We'll cut back on 5 on each one, and every month we'll taper just a little bit to ease out of this buying spree. But because of what's going on with Evergrande and some of this global uncertainty, especially with the political side of things, I think that now he has to rein it back up a little bit and say there's going to be accommodative and paying attention to market dynamics. I think they'll soften the blow a little bit tomorrow. I was actually expecting the markets to react negatively to whatever comments. I have a feeling he's going to change his talk track a little bit to incorporate in Evergrande, but we'll have to wait and see. Okay, so here's another question from Catherine, who's here today. That's why I wanted to get to this one. Big Eb says, Fed drama will move the market one way or another. Yep, absolutely, which is why we need to know what time that's coming out and be very careful. Catherine says, why is AMC the largest holding of the IWM by almost a factor of 2? What would it take for that to change? And is it the reason the Russell continues to be in the yellow box? No, I don't think it's that. I got questions. Well, I'm hoping I have some answers for you, Catherine, but I don't have a ton on that. Every year, the Russell rebalances. So they're supposed to rebalance every year. I believe it's June, the last day of June, June 31st, I think. Are there 31 days in June? I believe there are. That last day in June is when they rebalance a portfolio. And here is the weightings right now in the Russell 2000 so you guys can see. You'll notice right away that, yes, in fact, where did it go? Wow, I just had it there and it disappeared. Isn't that nice? Hello? I just had the dang screen up. Okay, bizarre. Okay, here we go. So you can see the top one. The weighting is 0.72 for AMC, and then the number 2 holding is Intellia Therapeutics, which is only 0.35. So you are correct, Catherine. It is double. My assumption is that has to do with this rapid ascent of share price, and they just have not adjusted, although they should have readjusted this back in June, at the end of June of this year. So right now, I think it completely skews things for the Russell. It usually would be rebalanced, and this was nowhere near the top holding. Now, the interesting thing here is another trick question for you. What is the upper cutoff? When you look at the Russell 2000, it is the small cap index, right? Small caps have an upward ceiling that they use. And from the Russell's perspective, there's a number that says if it's above this market cap, it's no longer small cap. So here's your trivia question for the day, I've had multiple trivia questions today. What is the cutoff for the Russell 2000 as far as market capitalization? Once it gets above this number, it has to be removed and moved into another index. What's that cutoff for the Russell 2000? Just so you guys test your mind today. Get the juices flowing in the old cerebellum. All right, so that, let me see. I thought I wrote down their market cap too, because they had their market cap has just soared, but I don't seem to have that one here. Market valuation. The market cap on AMC is hilarious. Yeah, so I'll go back here, and they got market value there, which is kind of a weird one. Let's go to Yahoo. I think it's just so I can bring that up. And I'll show you guys here. So go to Yahoo, go to Finance. Johnson & Johnson releases a new vaccine. Yay. So, anybody? AMC was added when it was a penny stock. Now it means correct. So, no, 420 billion would be way, way, way too big, Medic. That's huge. That's large cap. That's getting into mega cap stock status there. So, let me go in here and show you AMC. We'll bring up that one. Just so you can see the market capitalization. Market cap, $19 billion. That's the market cap for AMC, and the cutoff for the Russell 2000 is, drum roll, 7.3 billion. So right now, AMC is in an interesting situation because it's going to get removed from the Russell 2000 if it stays here, right? So 7.3 billion is the top for the Russell 2000, where anything above that should be removed. And again, that's why Tom says it was added when it was a penny stock, and then it was a meme stock, and all of a sudden just shot up. From what I read, it was 7.3 billion would be small cap, which is crazy because that's good size. But right now, AMC is above that. So what has to happen here? If AMC in fact stays at those price thresholds, they'll have to move it, and it'll probably go into the Russell 1000, which I believe has a higher market cap ceiling. But look at AMC's chart. I wouldn't say this is why Russell's staying in that zone. It's just they're not in favor right now. Small caps are not the cat's meow, if you will. They're just looking kind of weak and traveling sideways. It's a great chart if you look at it. I mean, I love this chart personally. It's just crazy. Let me get those Bollinger Bands off of there. All right, what else do we got? So that was Catherine's. And let's see what time I got. I got to get to the vet, so I'm going to kind of wrap this up soon. Jeff is, I believe, here with us today. So, Jeff, thank you for the email. Glad to hear your wife is doing much better. I'm going to have to paraphrase this one. So it was a long email, and basically he was in some strategies on the SPX, kind of in a complex option strategy, and yesterday, near the end of the day, things were just tanking, right? As the market was breaking some lows, he saw it tanking. He said, you know what? I'm going to get out before the end of the day. So I ended up bailing on this position and taking a significant loss, which I have to commend you for, because it's tough to have the guts to take a loss, especially when you know it's a big one, right? But it's part of the game. And the challenge was, what happened is we saw a huge rally up right at the end, and then, it gapped a little bit higher this morning on the open. So what goes on in your head here is this battle. I call it the devils and angels argument, where the devil's like, you idiot, you shouldn't have done that, you're a loser, you got out, you should just hold it and you would have made a lot more money. Oh, what are you thinking? And the angel's like, hey, you did the right thing because you just don't know. I'm going to put my side would be on the angel side here, which is, as that market was falling apart yesterday, I think that this market is so poised for some kind of flash crash, and it looked like it was starting to set up that way. There wasn't any real aggressive, strong surges to the south side. It just slowly drifted down all day. But that could start triggering algorithms, systemic systems start to kick in. All of a sudden, people are getting called on over-leveraged long positions, and things start to sell off. You could see a real sharp move down. So I commend you. I think you did the right thing, Jeff, which is you got out, you took a loss, and it juked you. It went the opposite direction, unfortunately. But it could very easily have gapped down another 2% and did nothing but fall today, like we saw back in February, right? Oh, whatever the concern now is, the Delta variant, the Gamma Theta variant, whatever it's going to be the next time. To me, I think you did the right thing. It's just frustrating as a trader. I've done this a million times, probably not even exaggerating to say a million times, pretty close, where you get out of something and you're like, damn it, I don't want to get out, but I really should because this is my maximum loss. And you take that stop loss, and then literally the second you hit the button, you're the dead low print. Does that ever happen to anybody here? I've literally watched the time on sales where when I sell, I'm the only one who transacted at that price, and then price just shot up the rest of the day. And you're like, son of a... This stuff happens, but I think you're right to do what you have done. Don't overthink it. Don't second guess it. You followed your rules. You followed your plan. You had a number, and you said, yeah, this is too much. The risk versus the reward was against you at that point. The risk was this thing keeps falling. We have a total systemic collapse. We don't raise the debt ceiling. We don't pass infrastructure bill. Powell starts to taper, and then Evergrande defaults on their debt. And this market's going to be on 30% on that. If you get that perfect storm of events, you could have lost a lot. So make sure that don't feel down on yourself. I think you did it great. My favorite trades are the ones I know it's a losing trade and close the trade right before it hits my stop. Yes, I like that too. That makes me feel good where you're like, man, I know this thing's not, you got your stop is, let's say, 50 cents lower and it's just dropping and dropping. You look in the market internals and you go, you know what? I'm getting out. I don't need to give away the extra 40 cents. I'll take this 10-cent loss and just I've done it all the time. Freeport McMoran's getting hammered. What do you think, Merlin? Evergrande have something to do with it? Yes. So Evergrande, I don't know all details of their business, but let's go to FCX. I'm still getting hammered. I mean, it definitely got beat up today, but it's still holding its own. I think long term, wrong keystrokes. FCX, Freeport McMoran. Where are we going to come back to? Personally, I think that this is no longer a screaming buy. I think you're just waiting for a pullback, maybe to some demand levels. If you're really aggressive and want to buy it, maybe you sell some puts down here to right around $25. But I'd be looking at shorting this thing if it bounced up to 35. I think that the Chinese thing with Evergrande, and I'll have to do some research in the next couple days on what their actual impact in the commodities markets are, because they're such a large conglomerate and I don't really follow them. But I do believe they have an impact on this one as well, the mining companies. So if I was to buy puts, the market would have gone up so much. Yeah, maybe, Lisa. The nature of the beast, right? But Jeff, yeah, I think you did the right thing. It's frustrating, and as a trader, it's one of those ones that just eats away at you and gets you more and more frustrated the more you think about it. So don't think about it. You just got to learn from it, move on to the next trade, and hopefully take some learning lesson out of that one. To me, the learning lesson is you did the right thing. The market just ripped back up. And his argument was, look, you mentioned yesterday, Merlin, that when you have a big down day, a lot of times that last hour, you can get a real sharp spike. Yeah. Normally what happens is, in my mind, from my experience, is one of two things happen. When you have an aggressive down day like we did yesterday, it either accelerates, right, going into the close as everyone's panicking and going, oh crap, I got to get out of this stuff before the close, and they just unload, right? Then you get the real big spikes down. The other one is what happened yesterday, which is bottom fishers. People step in right at the end and go, it's oversold, and they buy it, right? You don't usually see it sell off aggressively, and then the last, half hour is just flat. It's usually aggressive one way or the other. Morker should push, yes. We'll see. I mean, who knows what does Evergrande impact that market as well? I'm curious to see what the crude oil inventory numbers are for tomorrow. I've been talking about crude oil a little bit. I know that Greg Manarino is very bullish on it, which is one of Brendan's favorite guys. I'm still bearish. I still got to pull the bearish hat just because of what's in that blue square, or whatever color that square is. It's just short term, that trend looks to be a bit weaker. Long term, you're right. It's absolutely to the upside, and then probably long term will be more upside. But as someone who's looking to trade a week or maybe a couple of weeks, I'm thinking south side here for crude oil. But we'll have to wait and see what the inventory numbers are. Alex, good to see you, my friend. Getting ready for that World Series. It's hard to believe that the two best teams in baseball, by a gigantic margin, are in the same division, Giants and Dodgers. Unbelievable that they're doing that well. So anyway, good to have you back with us. Let's see, for tomorrow, as I wrap things up here so I can get over to the... Shh, don't say the word too loud. My dog's listening. Get over to the vet. We have tomorrow existing home sales. So these are going to be 30 minutes into the trading day. You have existing home sales. That's going to be pretty important. I think that the expectation is they're going to be sliding a little bit, but if these mortgage rates keep dropping as they have been over the past few weeks, then you might get more existing home sales than thought before. You also have crude oil inventories coming out at 7:30 in the morning, and then we have the big stuff, which is the FOMC. 11 a.m., you have economic projections, the FOMC statement. Right now, the rate is expected to stay right where it's at. No shock there. The issue is what happens at this press conference after they release, and we get Mr. Powell making some statements about, or just answering a bunch of questions. Sometimes he has the tendency to go a little off track and jump off the rails with his comments, but hopefully he'll keep it in line and save us some volatility. But remember, that's all during market hours, so you could see some tremendous volatility in that last hour or so. Earnings-wise, you don't have anything really super significant. You've got General Mills, BlackBerry, Steelcase, and then KB Homes. As I mentioned, KB Homes and Lennar are reporting earnings this week, and on Friday we have new home sales, so that will be something to keep an eye on. Rob L says, why am I holding VIH? At this point, it's just trash. I'm just going to keep it. I mean, there's no reason for me to dump it now. VIH is just garbage at this point. But, yeah, they're right back down to where it was. Right back down to $10, which is where it started at. So my guess is this could be one of those ones where you just end up getting your $10 back because they have 2 years to spend the money they collected for this SPAC, and then they have to pay you back, which I'm assuming would be at the initial price of $10. I'm assuming. I don't know how that works. All right. Let's see. I think that's going to do it. All right, everybody. That will do it for me. I'm going to make sure I have Bill Addis on the program tomorrow. We will be talking about bonds and interest rates. He's got some more charts to look at. Chelsea wants to look at EVC. Why not, since you just said the E to the V to the C. Entravision? Okay, so most people here know I don't trade penny stocks. I just don't think it's worth the risk. Something under $10 is still, in my mind, a penny stock. So chart-wise, I don't know what the Entravision does. Entravision Communications. Chart looks great. Chart really looks great. I mean, you can see it's the quintessential definition of an uptrend. Higher highs, higher lows. That trend line, we could add on some moving averages here. It's probably going to hug these pretty good. Yeah, look at that 50-period moving average, just kissing it nonstop. Boom, boom, boom. You know, you're looking at a little bit of hesitation right now. I would say if you close below this 50-period moving average, then get out. If not, stay in it. And the trend looks beautiful. It might be slowing down a little bit, but still looking pretty decent here, Chowski. I like this one. Even though it's very thinly traded, you can see down here at the bottom, your volume is not substantial. You know, 800,000 shares traded a day. It's a little low for me, but that's just my 2 cents. All right, everybody, that's going to do it for me for today. Bill Addis guest tomorrow. Again, if you have comments, questions, feedback, topics you want me to talk about, or you just have great questions to send in, as we saw today from quite a few. We had one from Jeff. We had some from Catherine. Oh, Skilled Stocksman, I'll get to yours. I forgot to get to yours, buddy. Yeah, I'll get to that one on tomorrow's show because it's not time. That doesn't need to be a time-based one, but it's about indexes and relationships. But anyway, I will see you guys tomorrow. If you have feedbacks, send them on in at TraderMerlin@gmail.com or hit that thumbs up button, subscribe, whatever you guys like. I will see you all on tomorrow's show. Take care, everybody.